Good afternoon, everyone, and welcome to Monthly Market Report. It's Alissa Coram here, and we have another great show for you in store. Joining me as he does on the show every month is my co-host, hedge fund manager Jim Roppel, founder of the Roppel Report. And I'm sorry to keep people waiting in anticipation, but here we are, Jim, and we're pumped and ready to go.
Fired up. Let's bring the fire.
Let's do it. All right. So I think what a lot of investors want to know right now, Jim, is quite simply how to handle their actively managed portfolios when you get this kind of destruction and volatility.
The best way in an ideal situation is when we had DeepSeek AI Monday disaster and a lot of really high quality TMLs broke the 50 on monster volume. That right there, you were shedding names that were breaking down. It's a major, guardrail violation. And so you were already getting light there. And subsequently to that, there was not a lot of opportunity to do a lot of buying. It was pretty much a slow, steady regression off a margin. So getting it right from the start is a big help. Like right now, I would say my market temperature would be 1 on short term, although we're deeply, deeply oversold and a violent bounce is possible at any minute. But the short-term trend is violently down, intermediate trend violently down. Long-term trend, I'm looking at fundamentals, which are as bullish as I've ever seen them, barring a recession, which we may or may not get. And we can talk about that in a little bit.
Yeah. And I want to give you props, Jim, because last month on this show, you said that folks needed to chill it. They needed to chill it so that coming out of this, we can really kill it. So that definitely stuck with me over the last month, but you're totally right. Quite simply put, it comes down to looking at those sell signals, whether it's on the index level or your individual holdings, backing away when things aren't working versus just digging your heels in because you're long-term bullish. You can't be blind to those sell signals in the short term. And you've talked a lot on this show about hedging, but last month as well too, you weren't just talking about hedging at that point. You were also talking about raising cash. So I think that was a really good call. We did get a little bit of a head fake potentially with a follow through day in spirit, but then 2 days later, the S&P got rejected at the 200 day. I'll pull up the chart for a good visual there. But even with that, incremental exposure is best, right? Incremental decisions. I know you're big on that, both in scaling in and in reducing exposure as well.
I'm a dimmer switch. I turn it up, I turn it on. Plungers, Livermore plunger, boy plunger. I think that is a really easy way to get yourself chapped into oblivion. So I want to back up. Like I said, chill it so we can kill it. But I didn't recognize how big this opportunity was going to get. Like I was not at all. I don't think anybody thought the magnitude of the tariffs it was a shock to everybody. Now I would say to you, how long would you be willing to wait to double your account or better? Would you wait through the summer for another? Why did everybody crush it? Why did you crush it? Triple digits last year? Because we came off of a deeply, deeply depressed market. Right. This opportunity is getting rich. I mean, it's getting bigger the more we like that rubber band's really stretched. So if I was excited for what I thought was going to be a normal pullback, I'm like double excited now.
Yeah, I know. I love before you've talked about that concept of a rubber band stretching and, how far down we go could lead to an even bigger rebound potentially. So that then begs the question, Jim, of what signs do you look for? You mentioned perhaps here in the short term, getting extended to the downside. We could see a little bit of relief there, but how are you going to be playing that? Or do you wait for more of a confirmation before getting involved?
Okay, I'm a trend follower and a strict trend follower. So at the top, I'm raging bullish. And at the bottom, I'm raging bearish and late. Because I'm waiting for that trend to turn up. Now, today we had a really great clue volume was the highest it's been in, for as far back as I can remember. And certainly the highest, and this was a support day. But the problem is when I looked at my percentage gain in volume, the top 25 issues were all ETFs except for one. So this was not a normal day of leaders being picked. Now, if you look at the percentage gainers today, they were all stocks that were obliterated, which signals short covering, not new positions being established. So this is definitely not the day. And on a monster upside reversal, which this was not, it tried to be, and then it was rejected.
Right.
So we're counting, but I'm going to be late. Also, I'm always very afraid at the bottom. I'm emotional. I mean, if I can get this excited, I can also get really nervous at the bottom.
Yeah.
So wait for leaders, new names. We'll discuss some names at the end.
Great. Yeah, and I mean, you say you're late, but really you're just not picking a bottom, and you're still earlier than when it's obvious to the crowd, is what I would say, by using the follow through day. Is that something that you use, or really is it more about that leadership underneath the surface, a combination of both? What are some of those clues that you are going to be looking for?
It's both. A follow through day in itself is, first of all, that's my major indicator. Like Bill would call me and say, "What did you buy?" And he'd get mad if I didn't have something. But that is a signal to test the market, not to plunge, to see if you can make money. Now, then once you get the signal, you need to run your screens and what's up on volume. What is in your list? You always have to have your list before the turn. Now, another major issue is stocks that are making new highs in bad periods are going to be consumer non-durables, tobacco, toothpaste, beer, consumer non-durables. They are going to fall like a stone when the market's real. So you have to see what's popping up. And were you fortunate enough to catch a name that is a new name that has all the TML qualities that came out ahead of the follow-through day? Now, that stock is very, very likely, like E-Research in the 2000 bottom, or the bottom of the 2000 bear. I think it was in late 02 or 03. It came out 2 weeks before the follow-through day. So if you can, now that's really pressing things up, but those are big clues. What kind of merchandise is coming out?
Right. Exactly. And as you mentioned, we'll be taking a look at some potential watch list names a little bit later on. Sticking with handling this market, because a lot of the last month, so March and even this, first handful of trading days in April, a lot of the focus has been on the tariffs. But you mentioned we were starting to see cracks in the market earlier than that, specifically with that leading AI theme, with the big DeepSeek day and the threat that presented. And a lot of those stocks never really recovered. Many, if not all of the leaders of that theme, at least thus far. And then you layer on the tariff news and a lot of the headline flow there. So right now there's a lot of uncertainty. But do you recall other market periods where you have this news-driven element that is sparking volatility? And maybe when you do get a turn, I mean, things that I can think of recently are all more Fed related, other than if you go back to 2020. But since then, it seems like uncertainty has been tied to Fed and the Fed pivoting. But what about now? And how do we navigate these headlines? It seems like there was a little bit of a false start this morning with some rumors. But this situation right now is very fluid. So how are you as a trader navigating that?
So it really depends a lot on what bottoms the market. Is it Fed intervention? Is it an emergency intermediate cut, which could scare the market? The market could go, "Oh my God, how bad is it going to get?" So if we get that, it's the reaction to it.
Right.
Is it a fundamental change in policy? I mean, let's say Trump, does he get concessions? How big are they? And how long does it take to get them? If he gets them immediately, we will not have a recession or as bad of a recession. If this drags on, who knows how long? I mean, this reminds me a lot of the 98 currency crisis, where week, another country's currency got weak, and it was a news-driven situation. But a combination of Fed action and policy action that needs to be corroborated by the market. You need all of it to line up.
I love what you said there about market corroboration. That's huge, because the headlines could be saying one thing, the market could be doing another, and it really is the market that is our guiding light here to filter out that noise, because it does seem like there's a lot of noise out there, and even with a potentially somewhat bullish signal to dip our toes back in the water. Look at the positioning. It's all about context, right? We've been below that 200 day in a weak position. So, if you're talking about a time to gun it, we haven't quite seen that yet.
So this is a real quandary because most bears are 3 legs down and we've had 2. The media has really overblown this wildly. We're down 26% high to low on NASDAQ. That's not a bad bear. What is bad is the magnitude or how quickly it's occurred.
Right.
That has been a shocker. Now, the faster you come down is more likely to give you a V-shaped bottom. But we have to see how long it takes to, like, COVID was a V-shaped bottom, but it was beyond our control.
Mm-hmm.
Okay. Now
Yeah,
the Fed came in huge,
scenario.
but there wasn't like the administration couldn't just flip the switch and change everything.
Right.
Okay. So we do have that right now. This could end quickly and it could take a very long time. Again, the market will tell us. And I was on a call with a bunch of hedge fund people this morning. And in the end, after we had this hour-long discussion, we really just said, well, we kind of have to see what clue the market gives us and what leaders come out. It's all, you said it, I said it, then you corroborated it. The market will tell us. We don't have to guess, and you don't have to be early. People lose more money trying to be early than they make waiting for it to, I was going to say wait for the 200, but the follow-through days that occur below the 200 are the most powerful because the rubber band's been stretched so fast, so quickly. So there's a lot going on right now.
Yeah, that's what happened at the end of the 2022 bear market. We did get 3 waves down there. So I think that's what's interesting. Obviously, we can't predict, but we can do scenario analysis of what could play out. I love the whole if-then thing. If we get deals quickly and if the market responds this way, then X. Or if this is more drawn out, this other scenario is more likely more of a chop sort of scenario. Either which way, though, Jim, it seems like the focus should be on stocks that are showing that relative strength, but also have the fundamental and story characteristics that you're looking for, right? That are holding up in this destruction.
U.S. Steel's picking up its head right now, but it doesn't really possess the canceling characteristics. The base is incredibly choppy, and it may work. Maybe we're going to have a commodities-driven market. Maybe the protectionist tariffs are going to help U.S. Steel, but it is not a prototypical CanSlim template model book stock. So if you really are looking for your next APP or AppLovin, if you go back and look at the template there, these are rare, and this is what you should be looking for. Again, new highs are the major. New highs in RS are going to trump everything because about 30% of leading stocks have crummy earnings. All right. But when you have the triple-digit sales and earnings, it makes it a lot easier to identify them.
Absolutely. Yeah. So, and I think that for me personally, that helps with conviction. Because I guess if you're looking at a 30 to 70 split, I'd rather go with the ones that are those growth powerhouses that also are showing that relative strength and it showing up in the charts. Jim, before we talk about more individual stocks and ones that are on your radar right now, I would love your thoughts and anything else that you're looking at, from a macro perspective or, what else in addition to tariffs? You mentioned the Fed potentially. Is there anything else out there or maybe even secondary indicators like the VIX or anything of that nature that you're also keeping tabs on right now at sort of a high level before we dig into some stocks?
Okay, so I kind of have about six, five to whatever. I have a bunch of indicators, and they're all crazy extreme. Overbought, oversold, put to call. Well, put to call is not quite. The VIX, yes. Bear bull sentiment, more bears than bulls for multiple weeks. Overbought, oversold. There's all of these indicators are measuring fear generally. The McClellan oscillator, but it's such a news-driven market. At any minute, you could see a 2 to 5% move in 10 minutes. So until we get a durable trend, I
Mm.
think it is I would literally turn off, like I don't have a TV in my home office. And I saw this massive explosion up. And I'm like,
Mhm.
I'm not biting. I am not
Yeah.
biting. I think this is at this exact minute because we're so oversold and extreme on so many readings. I think people like, I want to get involved. But I think this is a market at this exact minute where shorts are going to get creamed and longs are going to get creamed. We're in a chop fest. Well, a chop fest with a violent downward bias. So all of those readings that are so extreme, and we do have the preponderance of them deeply oversold. Not all of them will trigger. It's extremely rare that you're going to get 8 of 8 to trigger. Okay, you're going
Yeah.
to have to go. You can't hang your hat on. Well, put to call hasn't triggered. I'm going to wait for that.
Right.
If you get a follow through day and say 4 or 5, 6, 7 of your 8 have triggered, you have to go.
Mm.
It almost never lines up perfectly. There's always some type of boogeyman out there to keep you in fear, or your number one indicator doesn't trigger. Price and volume. And I do strongly believe volume matters. And I think that's why the follow through day was a big signal that it didn't work. Now, it was very tempting, and everybody wants to get right back to, oh, I was killing it last year. I want to get there right now.
Mhm.
And again, I'll tell you, more money's lost trying to be early than
Right.
waiting a little bit.
Yeah. And that one was tough because you had the, triple witching comparison, and Mike Webster, our senior market strategist, swears up and down, and I believe him because you were very close with IBD founder Bill O'Neill, but so was he, and he shared an office with him, and he said if Bill were here, IBD founder, he would have called that. But again, it's an incremental decision, which there was um an undercut 2 days later. So, you dip in, and even if you're testing, just like if we do get a real follow through day, you're not going from 0 to 100% exposure, right? You're using that dial switch, as you mentioned.
Max exposure for me on a follow through day that's totally checks all the boxes
Yeah.
is probably 30%. And that's bold. Okay, that's bold. In other words, the first one I
Mhm.
buy, I immediately gets traction.
Yeah.
But, back to Webster, he shared an office with Bill. All right, I talk to Bill occasionally. I mean, and Webby knows the stats
Yeah.
cold. I'm just a lot more of a field trader. Like, am I getting traction? Am I
Mhm.
seeing names? Like, he knows all the stats on X number of days down and above this MA and all that. He's the man when it comes to that stuff. I tend to feel it out. So, but
Yeah.
also, again, I'm a stats guy. If you
Mhm.
undercut the low of the follow through day, the odds go to like 4%. It's going to work. If you get a distribution day in the first 4 days, 3 days,
Yeah.
it's almost a certainty it's not going to work.
Right.
It's
And
also like if you get 2 failed follow through days in a row, you're very likely to be in a bear market.
yeah, right. So we did get a pretty quick signal to back away there. But I pulled up COVID because, and I know we talked about different setup, different conditions, but just your comment on the volatility, right? You can get that swinging both ways. I mean, how many big up days did we had and have, and the destruction continued, right? During COVID, I think 2011 and 2015 also had some similar periods there, Jim. So as you said, you want to see some sort of trend. You're not just going to jump on the first big up day that we get.
The biggest up days are always in bear markets because it's fear driving it. Fear of shorts getting killed. So the short squeeze inter downtrend rallies are super violent. Your biggest up days are percentage wise are in bears. and it's not greed driving it. It's not greed to get in. It's fear of short sellers they're trying to cover. So it's so tempting. But I will say today's volume was something, and it was supportive. So we don't have to have 3 legs down. Oh, we normally do. But okay, how about this? We don't have a third leg down. We have a follow through day, and 5 high quality TMLs come out. I'm not going to go, I have to have a third leg down.
Yeah.
You have to go with what the market's giving you.
And then back away if it doesn't work. I think that's the other thing too, is sometimes people feel stuck in a trade.
Yeah.
So I'm saying this because I talked to so many traders on IBD Live. Maybe it's the right ticker and the story, but the timing's all wrong, and then they feel trapped in it. So timing on the index level as well as the individual stocks, I mean, that's important. Even if the idea ultimately is right, you don't want to be messing up by getting in at the wrong time or not getting out at the right time.
My partner, who I co-founded my crypto fund with, in a bear market said, Jim, and this was in crypto, he's like, just like right now, he's like, the fundamental underpinnings are not being reflected by price. And although the golden goose is ripping and we have AI and robotics and autonomous driving, and we're likely to have lower taxes and deregulation and all this wonderful stuff, if the market doesn't corroborate, you're wrong. You might be accurate on your assessment of fundamentals, but if the market doesn't believe it, it doesn't matter. So until the market corroborates all these, I'm a max golden goose long double 10. I mean, we've never seen conditions in my life like this.
The backdrop, the bullish long-term backdrop.
Ever. But the market doesn't agree at this minute. I'm wrong. Okay, the market says I'm wrong. But I have a history of, look, I've done this a lot. I started 40 years ago. This is a moment, okay? This is a moment, but it is a moment in time when we've never had a more fundamental bullish backdrop. So this is going to clear. And it's probably going to clear, in my opinion, a lot faster than you think. I'm not saying to test it. You don't test on fundamentals. You test on technicals. So
yeah. Would you say, so Jim, you've been doing this a long time, as you said, there's studies out there or stats out there about the money to be made in the early stages of a new uptrend. Can you talk a little bit about that? Is that your experience in past trading cycles?
I think let me agree that the price moves initially can be gargantuan, but there's so many false starts and there's a lot of chop in the early stages. Look, if you find a stock that's going to go from 50 to 400, but it's all over the place all the way, you can't sit and make money with it. So the price gains off the dead low, because that rubber band is coming back, are going to be big. But can you sit? If you can't sit, you can't harvest them. You can't make the money. So I would rather, of course, I'm going to test a follow through date, no matter where we are. But I have found in my trading that I've made a lot more money a month or two into the bull run when my confidence is higher, when I can really lever up. And look, without confidence, you're going to get shaken out, even if you're in the one, because they all pull back. And when they do, if you don't believe in it, the general market or the company, you're going to get shaken out. Lower volatility markets are much easier to make money in. And initial moves off the bottom after, especially when you go like, this has been a waterfall. The market is deeply, deeply oversold. And this is a cowboy short-term trader's paradise. But I am the worst short-term trader ever. I keep trying to tell myself I'm good at it and I lose some money. And then I remember, oh, I know who I am.
Yeah. Knowing who you are as a trader. But I think, so Jim, what you're saying, I think is good news for traders out there who are eager to jump back in, that if you wait till you are seeing those setups develop, till the volatility subsides, till you have more confidence, and also probably by that point, maybe we're getting back above more of those major moving averages or in a power trend market. Like you said, you're a trend follower, so seeing a trending market, and really that's when you're pressing on the gas, because the odds are more in your favor. So I think that's reassuring to folks out there who, again, are eager to get back in right here.
Well, I have a little bit of bear and bull news. Most bear markets are like 9 months, and we're maybe 4 months, or we're only 2, 3, 4 months into this thing. History would say we have several months to go. But what does that usher in? Bull markets last 18 months to 3, 4 years. So yeah, I asked you before, what are you willing to go through and wait to have another shot at doubling or better your account? So we're 2 to 4 months into this thing. We have to wait another 2 to 4 months, maybe 5, I don't know, to have another shot to double or triple your account.
Yeah.
Like, I'll take that bet every time.
Yeah.
Yeah, I'm gonna stick on 20, dealer. I mean,
Exactly, because I feel like if, and some traders are great at the cowboy day trade stuff, but if you're not, and maybe there is a little bit of luck involved with that. I mean, for getting the exact bottom and that kind of things, but it can mess with your mindset. And if your mindset's thrown off, then you're not going to be able to focus when you do get that opportunity that you are talking about, right?
okay, you just said probably more what you just said is probably more important than anything we discussed. I don't care if we identify the dead bottom, the stock that's about to triple. And by the way, in the next bull market, you're going to see dozens of stocks triple, just like in every bull market. But if you don't have your head game straight because you tried to pick the bottom 5 times
Yeah.
and you know, you're going to miss it, or if your head game's not, psychology is not wired in correctly, little else matters. That is cutting your losses is job one. That'll keep you from screwing up your psychology, but you have to get that in order. And being in cash when things are ugly
Yep.
empowers you, and it emboldens you, actually. If
I
you're
love that.
stuck in a bunch of old material that's now stale, like a climax run APP or hymns or any of those climaxes, and
Mhm.
you're still in them, God forbid you're in SMCI from 1,000 years ago, your psychology's wrecked.
Yeah. I love that. Love that, Jim. So sounds like now is the time for max cash, max hedge until we do get some of those signals.
Max preparation.
Mm,
You cannot look away.
yeah.
In every the last week I wrote, we are always 3 days away from a major turn from bull to bear or bear to bull. You can't look. I think it's foolish to look at every tick, but I also think it's foolish to look away for weeks at a time.
Mhm.
I check in every day, multiple times a day, but I don't just stare at that screen. Charles Harris, he'd say, you need to read about the new technologies, read about your psychology, study past winners. You're going to miss all that if you're addicted to pulling the slot machine arm and you're glued to the screen all day. The Darvis, he didn't look at the screen ever. He didn't even have a screen.
Yeah. So it's a time to study because, as you said, I hear too often at market turns on the upside and downside that traders getting caught flat-footed. Let's be honest. I think that is the tendency to happen. It happened around the highs when we first started seeing a change in character in this market, and it's happened in past turns, to the upside. People getting in too late. There's a difference between being patient and waiting for the odds to improve, and then waiting for all of the news to be good and for us to be back at new highs. And so there's a balance there. But I think, to your point, staying engaged. So traders watching this show right now, they're doing the absolute right thing, at least in my book. I may be a little biased, but they're the type of traders that are preparing right now through watching this. So
At the dead top, There's complacency. People don't, they're like, oh, I'm just killing it. My account's up huge. And at the bottom, they're like, I'm afraid, I'm scared and fearful, FUD, fear, uncertainty. But you've got to have your buy list ready. This is not an endeavor for the lazy. This is hard. If it was easy, everybody would be a billionaire. And basically, it's really, really difficult. And when you do make your money, you earned it and you deserve it.
Well said. Okay, so with that, let's sharpen our pencils. Let's take a look at some potential watch list stocks on your radar right now, Jim, showing some positive signs as we're seeing a lot of stuff coming in glued. What's at the top of the radar right now, Jim?
Look at WGS, please.
Okay, so this is GeneDx in the biotech space.
Correct. And the fundamentals estimates 254% this year. It's been under accumulation. I think management owns a huge piece of it. And by the way, look at the tight line going back 3 months ago. I mean, this thing was really getting ready. They have a new product. It's in a great group. There are so many biotechs set up that look phenomenal. The problem is there's so many biotech stocks that are public that the group is ranked low because there's a lot of them that are just too early. But there's I think if you just took the top 15 names in here, this would be like the fourth best group in the whole market. There's some groups like flour and wheat and grain. There's like 3 stocks in it.
Right.
This has a ton of them. So I like this name very much. Again, it has to make a new high, or at the very least, violently. Really, your pivot is 108.
Right.
I love TGTX to me looks great. Okay, you drew the double bottom. There's going to be a lot because of the nature of this bear. It's been straight down. Elongated, slow water torture bears are cups. And like I said, I talked about the 98 bear market. It was a lot like this because it was a fear-driven currency crisis that swept the world. It was a lot of 3 violent legs down. If you wait for the cups and handles, the big leaders are going to come out of. A lot of novices would say, well, they're really damaged bases, but what they are is double bottoms.
Well, there you go. Yeah, I feel like I'm trying to envision for leading stocks with that relative strength that are holding the 200-day. Maybe a week or two ago, it was impressive that they were holding the 50-day. A lot of stuff has been pulled down, but you're still seeing relative strength in names above the 200-day that have gotten that undercut, whether it's going to be a shakeout +3, which some people are like, what is that pattern? That was back when stocks were around $30 and then you add 3 points. So we're roughly translating that to 5 to 10%. So you get a shakeout and then you add that 5 to 10% or some sort of double bottom like this one here. So you mentioned WGS, TGTX also in this theme.
I mean, look at the volume bar we have on today. The down move and then close mid range. They have a new MS drug. Look at the earnings estimate. Look at the sales growth, 146% last quarter. And I mean, if it wasn't for the bear market, I think this thing. Look at the numbers on this thing. And management again owns a lot of it. By the way, there's a big short position in this. I want to preface, the odds are we are going to have 3 legs down. So everything we're talking about, again, I'm not going to wait for a third leg. I will test. But if we do get you can't just go buy these stocks.
Yeah.
If we have a third leg down, 99% of stocks are going to go significantly lower. But this name to me, again, this group is phenomenal. The RS remains at 98, although RS is a bit of a lagging indicator. This just has everything. Comp rating 98. If you
I wonder what the 3-month RS is. We do have that as well. 97 for the 3-month. Which makes sense.
I just want to tell everybody this. If you just stayed in only 95 and above comp names, you would avoid 60, 70% of all the disasters, the names that just come unglued. And if you add in only stocks with RS of 90 or higher, you're just going to be in elite merchandise. I mean, you don't have to buy. You can buy anything. Okay, you could buy a Ferrari or a Yugo. I would rather buy a little bit less of the Ferrari and get the Ferrari.
Yeah, exactly. I see what you did there. Yeah, great points. I mean, so screening for comp and RS, that's a really great place to start. Okay, Jim, something that you said brings to my mind a follow-up question. So this is the if part. If we do get a follow-through day, you said best case scenario, you're ramping up to 30% exposure, sounds like in a handful of names. Um, and if that follow through day fails and we get a third leg down, what would you be using as your loss cutting strategy? Is it your tiered in thirds at certain percentages? Do you have an even tighter leash? How do you go about putting your stops in if we get a signal and then roll over?
So I would generally try to buy 4 names. Maybe like, and again, it's a test. I'm not really trying to make money. I'm trying to test to find out if I can make money. So I
Mhm.
don't have to take a 10% position, especially if the market's like right now, the odds of a third leg down are high. So I'm probably going to scale it back. I mean, that was one thing that Bill was really great at. He knew when to get large and he knew when to test. Bill would test with 100 shares. He might buy it 15 times in a day, and then other times he'd be buying 100,000 lots. He knew when to scale big up in size. And uh, a lot of traders who worked at O'Neill and Company, when they left and went on their own, failed because they didn't have Bill guardrailing them with exposure. But anyway, three from the initial purchase price, it's almost always 357. But if the market's breaking wide open and I'm
Mhm.
down 2 and everything else is failing, I'm likely to trim some of it or more of it. This is an art.
Yes.
If you're new, rules will save your bacon,
Yeah.
but experience gives you nuance and allows you to finesse things a little bit. And again, the more you deviate from rules, if sometimes the market will break lower and some leaders will break, but maybe yours won't. And maybe that's the real one. And you're going to dislodge it because you think you're, an artist as opposed to a rule follower. You, if you take that added risk and you nuance it,
Mhm.
you add risk that you're wrong. Um,
Yeah.
there's a lot to it, but the
Those are
gold.
some good general rules. And when you say, I'm sorry to jump in here, Jim, 357, you're talking about percentage below your purchase price.
And the reality is, I don't wait for 7% anymore. I mean, you're just wrong.
Maybe in a power trend and you're just, really up big on the year and you want to be patient with something. Maybe you'll give a last little piece, some room. If it's holding the 50-day, you as hypothetically, maybe that would be a time to
Well, you just
employ
said,
that.
so if you have look, the shorter the digestion, the higher the risk it is. Like a 2 weeks tight or a 3 weeks tight, they're much more prone to failure. But if I really know the fundamentals and have a massive cushion,
Yeah.
and I buy a 2, 3, 4, 5% on the 2, 3 weeks and it fails, I'm probably not going to sell it because I'm playing against my position. Okay, I
Mhm.
want size and bulk. Now it depends. If it breaks it violently, I'll let it
Yeah.
go. But ugh,
Yeah, there's an art to it. Depends on the kind of market you're in, depends on the stock's personality, the setup, your cushion, how you're doing on the air, all that good stuff. But I just wanted to throw that in real quick because we're not going to talk for another month. And if, between now and then we do get a potential follow through day, I think it's good just, for traders out there to have those little nuggets. Okay, if we do get that, what kind of position size and then what kind of stops would you be using? You wanna talk about more stocks on your list?
well, I just want to say this before.
Sure.
We are right on the cusp of earnings season,
Yes, we
and the
are.
numbers are not going to matter. That they could have somebody could post giant numbers, and then the CEO is going to come out and say, "We're seeing horrible forward look." It's going to be. It's hard to believe that this market's going to turn up before we get some a verbal confirmation from post earnings calls.
Mm,
That is going to matter greatly. Now, again, I'm not going to wait for it if the market decides to go straight up, but that's super important right now. I mean, if the Fed cuts and the market reacts, it's the reaction to earnings, it's the reaction to the Fed announcement. I've seen the Fed cut and the market go down.
yeah.
Back, 30 years ago, that happened a couple times. Um, And that's generally when you have a Fed cut and the market goes down, it's going to get really bad. That's what I've experienced.
Mm.
And anything's possible. I'm the most bullish guy in the world, but watch these reactions. And by the way, it's Masters week. It would be just fine if you watched a little bit of the Masters and didn't watch the market quite so much.
There you go. I like it. I like it. Who's your money on, Jim?
I'm partial to JT, Justin Thomas. I mean, he's an elite player, and he's in the, but there are Rory's always up there. I mean, but I like JT. I want to see that boy win.
All right.
How about you?
Well, my husband is in a fantasy golf league with my dad. They love broing out over the fantasy golf, and they play golf together. My husband he has bragging rights. He won the whole season last year, and he won the Masters last year. So we'll see. We'll see what happens. Have you done fantasy golf? You have to have your lineup. So you have a couple players that you're betting on, and this year it's like you have to have a captain and you get double points. I don't know exactly how all it works, but he said Spieth has done well for him in the Masters in the past.
Right.
But I'm not sure exactly. And Scheffler. So,
of course. I mean, Mr. Automatic.
Yeah, which I have 2.5 degrees of separation from, which is kind of, yeah. One of my best friends in Dallas, she's in the same Bible study as his wife. So I count that as close degrees of separation.
I want to bring this up. Even though Scheffler is the man, there's a direct corollary to stock trading.
Great.
When you win a tournament, that's great. And maybe it's a major, but the Masters is different. If you've never won it, it brings an added level of pressure. And pressure, like position size, your confidence in yourself, pressure can make you do the most ridiculous things in the market and really help you. So golf has so many correlations to the market. I mean, they will both humble you deeply.
Mm-hmm.
If you brag about being the greatest in the world, you're probably not, because the market, there's very few braggadocious monster killer long-term. Look at Druckenmiller. So self-deprecating. So, I lost this year, I didn't do whatever, there's, if you play golf and you have a decent game, you're very likely to be a good, emotionally controlled person.
The mindset's huge. I mean, even it's like, say you have a bad shot or a bad hole, you have to refocus, get back in the game. You can't get down on yourself and compound your mistakes. Yeah. So many
within your skill level. If you don't take shots that are way out of your ability.
Managing risk. Love it.
Totally. Did I drag this really far afield?
No, that was an appropriate tangent in my humble opinion. Let's go over a couple more stocks for the radar before we leave.
Rocket Lab. I think Trump wants these rates down, and the housing market. I mean, this is acting fair. Look at the blue volume bars when the market is being obliterated. I don't like low pivots. I don't like, but
not ready quite yet.
But why is it acting like this? Housing stocks have been, look at Pulte. And I don't like Pulte, but it does have some bottoming characteristics. Ooh, it got much worse. Can you look at it?
There was NVR, I think, was looking a little bit better, but even they've kind of pulled back this week, trying to hang in there.
If rates come down, the housing market could heat up, although there's a shortage of housing. Look, I love Robinhood. I think if you look at it on a monthly, this stock might have only had the first act. The innovative nature of this company so much reminds me of Schwab 40 years ago. This is millennial. This is the new millennial go-to. Like, they're not going to their dad Schwab or Fidelity. These guys have been trading crypto for a long time. They now have a sports betting market. It's just a much more dynamic name. And it had a great run. But if this is going to be the next, think about, we're still talking about Schwab, and it went public 40 years ago. Okay. Right. The fundamentals here look great. It is beaten up badly, but how many TML Can Slim names are holding above the 200? Not many.
Not many.
I like Dash.
Yep, I was about to say that's on my list. This
Again,
is another one where shakeout or double bottom potential.
you show them, Allie. That's it. That's
Yeah.
exactly what I'm looking at. And you have the Livermore large number pivot at 200.
Mhm.
Palantir, management matters, leadership matters. When you have like a ServiceNow, McDermott, or
Mhm.
in the fundamentals here, look at the under the hood. Look at these numbers. It's a 99 comp name, which has what is I don't. Wanda, I don't think has short-term RS like you do here, so I'm not sure what it is, but this could be.
Might be a little
It's weakened a bit. It
low.
almost has
Yeah.
to.
Yeah. Because of how much it came off the highs.
If this thing comes over 100 and we have a follow through day and you have multiple other leading names, this
Yeah.
is a very high quality name.
Mhm.
I would be very eager to get involved there. I look, Spotify. It's hard to find a better can slim
Mhm.
model book template.
This is
It's
another
just
one.
99 comp everything, and it's not just because I use it every day, all day. It's also a consumer non-durable like Netflix, and Netflix looks way worse. I'm not trying to say Netflix looks good, but it
Yeah.
has
It's
well,
still holding. It's still holding. This is one maybe
I have
double
to,
bottom round number,
yeah.
maybe.
You
We'll
know,
see.
those are some names, and they're like I said to you today, the percentage gaining names were not quality. They were nowhere near set up. They were more short covering uh,
Hmm.
moves.
Yeah, a lot of the beaten down
And you always look,
stuff
um,
too.
value buyers bottom markets
Yeah.
because growth buyers are like, technical analysis guys like, oh, I'm not touching this thing. Somebody's got to come in and stop the decline, and that's the value buyers.
Right.
So, and then it's first the short covering,
Mhm.
and then the value buyers, and then eventually the technicals turn up, and then we get involved.
Right.
There's no need to, a lot of kids come see me, caddies, and like, hey, how do you teach them how to
Mhm.
trade? And they're like, I basically tell them, look, you want to run, okay? If you just jog to your destination, you can make hundreds of millions of dollars. You're a kid. You're 20. I ran really hard when I was young, and I did end up making it, but the pain I went through to get there was not
Mm.
worth it. The losses I took and the mistakes I made because I was trying so hard to lever up and get big and make a killing.
Right.
Just take your time. Look, compound for 40 years.
Right.
Anybody who has 50 grand can become a multimillionaire. And God forbid you get really good and you have 50,000 or 100,000 today. Over 40 years, you can have $100 million. No, I know. I'm telling you, I know people who've done it.
That's incredible.
This methodology is so good. It's quite simple. If a stock is going to go from 50 to 300, it absolutely has got to be in the new high list. It's inescapable. The new high list is your gold bar opportunity. And if we're going to have a new rally, I'm sorry, not if, the golden
When?
goose ensures it. When the new high list is going to light up like a Christmas tree of presents of new stocks that are going to double and triple and go up. Some are going up 5x. Think about the rally we just had. How many
Yeah.
names went up 300-400%?
Yeah.
2,000?
In a very short time period too.
Yeah. And
Um,
it's going to happen over and over. That's why I get so excited because I know exactly what's happening. The rubber band's getting stretched. And when it comes back, the first, like, how about the ICN or what's the Indian bank?
I see.
Or nope,
I
it's
think
not.
this one.
IBN.
Yes.
Okay,
Yes.
guys, this is what you want to see. You want to see the market down 30-40%, and your stock's got to handle 10% off the high. That is telling you loud and clear. Pay attention to me. Look at the volume 3, 4, 5 weeks ago. What's up with that? And if you look at Indy, INDY, it's way off. That
Mhm.
whatever the name is, I just gave it to you.
I think I looked it up before. I think it's Aichichi. I could be wrong.
Yep. But this thing is a relative strength beast. Look at that
Yeah.
RS line leading. That is a
Mhm.
clear signal. No, it's not a signal, it's a condition. And it could fail. If
Mhm.
we have a 2-year 08, 09 bear market, this thing's going to get killed,
Yeah.
as is everything. But it's telling you,
Mhm.
keep your eyes on me.
Yeah. I love that encouragement, looking for the RS, screening for comp and RS, looking for the outstanding fundamental stories in combination with the charts that are holding up. There's one more that I want to run by you, Jim, that I'm sort of seeing as a potential double bottom in the works here too, and that's Lifetime LTH.
I'm a liquidity junkie. This is one of my subscribers loves this name and he talks to me about it all the time. And he's right. It fundamentally is phenomenal, but I see your ants up the left-hand side.
Yeah.
And the fundamentals are phenomenal. I really have looked at it. This guy sends me research on it. It's just too small for
Not
me.
big enough for you.
What's the average daily volume?
Let's see. So dollar volume, if you multiply 2.5 million
60, 70 million.
times a little under, yeah, $30 a share.
That's pretty good. But again, you have to think like this is going to work. It's not true.
But it's not part of your magic elixir,
But here's the thing. You
right?
have to think like an institution. If you have 1 billion or 5 billion, and those are the boys you want in your name, they really can't buy this.
Yeah, I
Okay.
hear you.
If you look at something like a TKO or a Dash, it has the magic elixir of price and volume. I'm sorry, earnings and volume. Monster, their earnings estimates are like 600%, and this is liquid.
Mhm.
Um,
Right. So yeah, looking for that liquidity too.
I
All
don't think
right.
the leaders have shown themselves just yet. We went through 4 or
Still
5 years.
early.
Okay, when things start to percolate, you're going to see a lot more. And oh, how about look? Can we talk about CoreWeave really quick?
Yeah, yeah.
Okay, this is a double-edged sword. I say, as well, what a lot of people say, any name that can come out in a bear market is the highest quality. To get a money manager to pony up and give
Mm,
his cash away when he's being blown out is the highest quality. But the other side of the coin is they lowered the price and they lowered the shares. They couldn't get they
yeah.
couldn't have done the deal if Nvidia didn't buy. They backstopped the deal, and then it broke syndicate bid. These are all things that I would normally say are bad. We'll have to see. Now they're not making money, which I hate. But this is one of the only pieces of new merchandise. And by the way, 2 crypto deals that were going public, were about to
Yeah.
file, canceled. StubHub canceled, which is not crypto.
Yeah.
The window was looking like it was just about to open the floodgates of IPO,
Right.
and it's closed.
Yeah. I did find that interesting because we even heard some little rumblings about crypto IPOs planning to go public. But really that was in the last week or two. But I guess the last couple of trading days maybe changed
Deribit
for some folks.
Deribit is in negotiations with Coinbase, late stage. eToro, Circle has
Yeah.
filed.
Mhm.
MyX has filed. There's like 5 of them that have filed, and I know.
But you think they're waiting now after, seeing what happened with CoreWeave or
I just think that I think they would go if they could raise the money, but
Mm,
institutions will not part with the cash at this minute. People
mm,
are, look, the margin clerk has been very busy. All right. The reason we went down so quick is because we've had a liquidity crisis. Why did gold break? Gold broke because it was the only thing with a bid. All right. Gold should not be, but by the way, this is deflationary. Okay. Oil breaking lower is deflationary. The Fed, Trueflation has inflation running at like 1.5%. With oil makes up 30% of the PPI. Rates are coming down. The media is scared the crap out of people. And the reality is we're not going to have inflation. The market is telling me today, the signal is between oil, trueflation, and yields, we're going to have deflation. And a lot of this, the market sniffs forward.
mm.
These autonomous driving, robots, software, AI. This is absurdly deflationary, and the market sniffs it out ahead of the game. It's hard to say that it's happening right now, but markets have this uncanny way of telling you the future before it gets here.
Well said. All right, Jim, sum it up. Let's bring it home. Your final thoughts on this episode.
I know a lot of people who've been blistered. You've been pounded. Go back and look at your charts. Why did you not cut your loss? Why did you buy inferior quality merchandise? But more than that, you're not going to get another at bat. The golden goose throws fastballs constantly, and it's never going to stop. Every bull cycle, the golden goose probably brings legit 8 true TML model book template powerhouses. That's the golden goose is injured. He's in getting some higher quality fuel for the next rally. We are going to have a monster rally, and I predict it's going to be way bigger than anyone can understand right now because of the underlying technology that the market is not corroborating at this minute. But be patient, stay focused, review your mistakes. Don't worry about your winners. You handle that just fine. Take a look at the failures. If you've had a hard time, you're going to get more opportunities. I blew my account up 3 times to 0, okay, before I stopped touching the burner and started to get right. And that's when I found Can Slim, and it changed my life. Like, I was least likely to succeed, learning disabled, dyslexic, crummy background, and it worked for me. It's going to work for it. If it worked for me, if you're as ADD as me and I made it work, you can do it.
Yes, you can do it. Both of us. I mean, I don't pretend to be anywhere close to your level, but each trading cycle, I have been able to level up my game. So I'm totally with you, Jim. Anyone can do it. And I think by watching this show, that's a huge part of that, a part of studying. And we know you'll keep us updated. Check out the Roppel Report, and Jim, we'll see you back here next month.
Looking forward to it. Have a great day.
All right. Thanks, Jim. That is it for us for this month on Monthly Market Report, but we will be back next month. And in the meantime, we've got a lot of content queued up for you, whether it's our Swing Trader Status Update show happening tomorrow live on YouTube at 5 p.m., Wednesday, our weekly podcast, Thursday, for leaderboard members, we have our quarterly leaderboard scorecard. Friday, of course, Mike Webster and I have our weekly Stock Market Today video for you to check out. And then coming up on Saturday, we have a short selling strategies webinar. For more information on that, check out investors.com. Thank you so much, everyone, for tuning in this month. We really appreciate it. And we will see you back here in May. Thank you.